how to do economic analysis or how to analyze economy of a country. For this purpose, we will need to understand what are the ruling factors that will give us an idea about the state of economy of a country. And these factors are number one, trade gap or trade deficit or trade surplus. Number two, balance of payment situation. Number three, inflation rate. Number four, interest rate. Number five, forex rate. Number six, whether the economy is in recession or it is in boom. As a matter of fact, the first five factor to a large extent will determine whether economy of a country is in recession or is it in boom. Number 8, crude prices. Number 9, how's the monsoon or agri products. Number 10, how are the fiscal policies of the government of that particular economy. And finally, monetary policies. So if we have to study economy of any country and come to some conclusion as to what kind of impact the economy is going to have on the valuations of our target company, these are some of the aspects that we will need to study as part of economy analysis. Please also remember, all these factors will also have interconnection. So when I say interconnection, what does it mean? It means if economy of a country is not doing well, so what is going to happen? That country will have inflation, very high inflation, and high inflation will lead to high interest rate. High interest rate again will result into high manufacturing cost, and thereby the whole economy will get into a vicious cycle. And just to overcome that vicious cycle, the government of that country will undertake few fiscal measures, and likewise the central bank of that country will take certain measures through the monetary policies so as to stabilize the inflation. And fiscal policies will be to ensure that the growth path by the economy is adhered to. So what the governments will do as part of the fiscal measure: number one, to promote the industrialization or manufacturing. Perhaps they will offer certain tax concessions. Number two, what the government will also do to give a boost to the economy of the country, they will also come out with a lot of spending on the infrastructure development. That in turn will ensure that there is economic activity happening, and that economic activity will have a multiplier effect. And this is how the second measure the government will take as part of the fiscal policies. And number three, the government will also come out with the different kind of incentives and benefits for the industry and for everyone else, so as to ensure that the growth of the economy is sustained, higher growth of the economy is achieved, and thereby economy of that particular country is set on the growth path. So these are 10 factors that will have interrelationship as far as the study of that economy is concerned.